Okay, so just a disclaimer before we start. I am not a financial guy. Whatever I'm saying here is my personal experience and my thoughts. I might be completely wrong, but for me personally, it's extremely helpful to look at that. So first of all, what is income statement and why do you care about income statement of your company? Income statement shows the performance of your company from certain date to certain date. So through a certain period, usually it can be a quarter or a year, it shows the financial performance of the company you work in, right? And I'm going to simplify the income statement here. It shows revenue, it shows expenses, and finally it substitutes one from another, and it's much more complicated than that. There are a bunch of different lines for revenue, different lines for expenses, different type of expenses, taxes, but at the end of the day, it will give you a net income. So if you go to your all hands on your company, especially if you have a big company, you will for sure hear this type of phrases. We need to increase our top line or increase our bottom line. Our bottom line is a problem right now, whatever. Bottom line's top line. So what does the hell it means? It's super simple. That's top line, and you go, guess what? That's the bottom. When someone talks about top line, they're talking about revenue, and specifically, it's how much money company made either by selling something or providing service, depending what the company does, right? How much money it made without taking into account any expenses, any taxes, anything like that. Then you have expenses applied. Usually, it substitutes a huge chunk of money, and then you have income. That's the actual money which company earned after we substitute expenses. So like the picture can be, here you have 1 million, and then expenses might be 900K, and the income can be, the net income can be 100K. So those type of numbers. And so what also important, the wages and salaries are expenses. So that's a very simple, kind of like a finance thing. Maybe you knew it, maybe you didn't. Hopefully it's clear now what does it mean. Hopefully it's going to help you on all hands meetings you have understand what it means. Usually when company says we want to increase top line or revenue, it means it wants to get more customers, grow the customer base, increase the penetration into market so it can make more money. It doesn't mean if revenue increases, the net income increases, because if revenue increases and expenses increases, for example, if the company needs more people to earn more money, your income, the net income might stay the same. So at the end of the day, the profit company made stays the same. So if company actively growing, and might focus specifically on revenue, but if company is stable and doesn't grow quickly, or maybe there's a sort of recession, then company will try to focus on their net income because revenue will drop, expenses might drop or might stay the same, and then if revenue drop and expenses stay the same, it will affect negatively the net income, right? So the company always want to protect, at the end of the day, the bottom line. So why is it important? As I said, we have security ops and R&D, and you have this in-house, and you have this as a service, and this was always kind of vendor. So let's say you work in security ops in-house. You are a member of the blue team. What does it mean for you? Well, unfortunately, you're not making any money for the company. The only place in this income statement you appear is expenses. That's your wages and salaries. On top of it, you also use some tooling and licenses and software. All of this is expenses. So for most of the companies, non-security companies, cybersecurity is expense. The reason they're building cybersecurity is because they want to protect themselves from money theft, maybe for privacy of their customers and so on. So they want to protect their business, meaning they want to protect existing revenue by building the cybersecurity program. But cybersecurity program for them do not make any money. So they're always losing money on cybersecurity. And the only question is, for them, is how much money they want to spend in cybersecurity to reduce the risk. And you often hear that, right? The goal of cybersecurity is to reduce the risk. So what companies are trying to evaluate is how much money they need to spend on cybersecurity to reduce the risk to lose more on a cyber breach, or by being fined by a regulator of some countries who would fine you because the citizens' private data was stolen, and now you're fined because you were not compliant with some GDPR or some other law of the privacy law, right? So that's really the question for that company. So if you're in security ops in-house and you're working for a hospital, that's a great thing to be, and you're really doing a great service to all the people who's going to a hospital and stuff. However, For the hospital itself, they're really just comparing, okay, what's the probability of the cyber incident, how much it's going to cost me, and how much that security ops cost me. So, and they're comparing those expenses on your wages. So what does it mean for your career? Let's say you have 5 people on your team. So you can calculate the expense. Let's say it's 100K a year, 5 people, it's $500,000 a year. That's the cost for the company. Plus, let's say you want some security software, some EDR and NDR, that's another 500K. So company has a $1 million expense to do a cybersecurity. Let's say. It's very simplified, but that's what company has, right? And of course, hospital would evaluate and say, yeah, sure, it's fine, because if we breached and something happens to patients or data is going to be stolen, we're going to lose much more. However, when you go and negotiate your salary and say, hey, I'm working so hard, I want a raise, I'm much better than I was a year ago, for company, it kind of doesn't matter. They kind of doesn't need you to get better in terms of if you're getting better, you're getting more expensive. If you don't do an impact, bigger impact on the company, then you just grow in expense. And what it means is, for example, you got better and you have a team of 5 people. Let's say one of you quit and you have a team of 4 people. So what company can say, okay, we know that guy actually got so much better in the last 3 years. Let's not hire that 5th guy or girl, and let's just increase the salary of the first one. So they try to balance the cost and expense of your team. Not necessarily, the goal is not necessarily to grow the teams. It's always in the lens of expenses. That's why if company has a limited budget for expenses on you, you're not going to grow there in terms of salary. You're not going to grow your team. And let's put it very straightforward. Every time you go and argue to buy a new tool, and that tool, let's say, costs, I don't know, $200K a year, that's a salary of the person. It's always like, okay, you bought this awesome EDR solution. Maybe now your team is not going to grow. That's a simple answer because the budget is limited. You cannot get both. So the question is, do you want another person on your team, or do you want that awesome EDR solution to buy? So, and that's why, honestly, it's very important service, but you have to understand why companies don't spend more money on you, why they don't increase your salary, why they don't increase the size of your team, and maybe why they don't buy that awesome NDR solution. Because in reality, the security team in the in-house is that expense section. So what's the difference if you're working for the service company and doing exactly the same job? Well, the difference is huge because service company are providing a service to other companies. So the more customers or clients a service company has, the more revenue they get. So even though you also an expense, like you always an expense, right? Someone needs to pay your wage and salary, but you also directly bring a revenue. Whatever you do day to day, your work as a SOC analyst, as a service, or threat intelligence as a service, directly impacts the top line of the company. So if you grow and can do a better job, which brings more customer, or you build a reputation by going to conferences and that brings more customers. Whatever brings more customers, if you can bring more customers, company might be fine to increase your salary and grow you because yes, it increases expense to get you better salary, better title, better position, maybe expand your team. But if it doubles the revenue or triples the revenue, the company going to be okay with that, right? So that's a very different position to be because now you're not just impacting on expenses, when you promote it, but if you're doing a good job, you're also impacting the revenue. Meaning if you're impacting the revenue more than you're impacting expenses, the net income of the company grows and all executives are going to be happy about that. All awesome, however, there's one little limitation of the service. The service business can only grow like with a certain linear speed, right? For example, if your company does a penetration tests or red team assessment, and let's say for each assessment, they need 3 people, right? 3 people, and they charge each company, let's say, I don't know, let's put it 200K. I don't know what's the prices for the charge, but 200K for, 6 months of the 3 people, right? Okay, and let's say these 3 people in the service company can engage in services and provide services for 4 companies, right? So the 4 different companies hired our service company, and those 3 people used 100% of their time to use with 4 companies. So now the math is kind of simple. In the 6 months, they can earn maximum of 800K. And let's say that would be a revenue. The expense for these 3 people, let's say it's going to be 200K for 6 months. If we don't take anything else into account, there's the taxes and services, and let's say they also use software, which costs 200K in 6 months. So the best case scenario with no taxes, we're getting to 400K of total income. And by the way, that's a horrible financial analysis. Don't ever show it to anyone who works in finances, but the simple idea is 3 people can make 800K. By making it, they spend 400K in the same period of time. So they can earn for a company 400K, which is awesome, right? If that's the equation, everyone is happy. But let's say it's not that bright and the prices for the services are not that great, and the only amount of money they can do is 500K. But the expense is the same. It means the maximum they can make is 100K in 6 months. Now let's say they learn about this awesome new tool which costs another 150K per year but would help them to perform the business. The first thing company would look at is like, okay, if we're going to spend another 150K for the tool, we're in a negative income. Either these 3 people need to work for more companies because of that tool, or it's pretty much useless because now we're not losing money, we're not making money, we're losing money. You see, this kind of math really limits how much each person can scale. And for example, if one of these people worked for a company for a few years and really grew as an expert and now wants an increase, again, unless that person can provide a service to more companies or somehow improve that service so much that companies are willing to pay more, then the problem here is, again, the service company cannot really pay you more, promote you, because it's going to affect the income and make it negative, and that's kind of useless for business. So because the service company, if a service company is just providing a service and don't making any product or anything like that, it really highly limits how much that company can scale, because to scale and increase number of customers and increase revenue, they also need to increase number of people working in the company. It means that they need to increase expenses, and that means there is a limited amount of money they can make. So if this company is public and it trades the shares, because the net income is not high, it's kind of going to be hard to grow that bottom line and impress investors and encourage them to invest more money. And that's why if you look at all cybersecurity who's providing a service, what usually they try to do at the end of the day, they try to build a product. Because as soon as they have a product, and that's the vendor case scenario, as soon as you're building a product, your revenue is how many customers you have who can buy a product. Especially if you have it as a service, it means how many subscribers you have to pay for your product. And that necessarily does not depend on number of people you have. You can have 10 people and 10 customers. You can have 10 people and 100 customers. You can have 10 people and 10,000 customers. It just really depends on the quality of your product. And quality of the product not always depends on the number of people. The quality of the product might actually depend on that high qualified experts who would make the product so much more better that 10 times or 100 times more customers would want to buy it. So the multiplier of the great product from R&D perspective to the revenue is much higher than the service, or specifically than in-house where you don't generate any revenue. So if you work in cybersecurity and build a product, you have a higher chance to get promoted and find a job which has higher salary if you can impact the revenue. And again, here we're getting back to what does impact company's revenue. And so if you don't know how your company makes money and what impacts the revenue and how you can impact company revenue, you should go and talk to your manager and ask, hey, what's our product? What are we doing? That project I'm working on, how does it affect and impact our company? Because if you're working on something which has zero impact on your company and you don't make that revenue and you just an expense, then it's going to be very hard to grow your career. So I hope that kind of helps. I know it's a lot of information to take. It does not mean by any chance that everyone has to go to work on R&D and because it's a much better job or anything else. There are great high-paid jobs in-house, there are great jobs in the service, and there is great jobs at the vendors. The jobs are different because the jobs focused on the impact. In-house, you providing impact by protecting your company, and you're protecting the revenue company is already making. You don't add into revenue, but you're protecting it. And the question is how much expense the company is ready to spend on you and your team and your tools to protect that revenue. Depending on the company, that's different. So you always have to ask the question, how much money the company can realistically spend on the security team, right? And so if you see that security team doesn't grow, maybe it's because companies simply cannot afford to spend more money on expenses to protect the revenue they're making, and they need to make more revenue. You're also much more affected by the impact on the revenue. If the revenue drops for the company, you're one of the type of people who doesn't produce a direct revenue, so you might be cut. The size of security team might be cut, and that's why what we see during the recession, we see that sizes of security teams reduced, even though they're already burned out. Company doesn't make a decision based on are you burned out or not. Company makes a decision on how much expenses you cost and how much revenue you bring, right? And how much you protect. What's the risk of losing the revenue? When you work on a service, you do have a direct impact on the revenue, so your career might grow really well, but you always have to think about that if it's a pure services with no product, the amount of money the company, and you specifically, making for the company can be just simply limited by amount of customers you can impact. So if the service company has any sort of platform which can multiply number of customers you can serve, that can greatly impact the amount of money the company makes and your impact on the revenue of the company. So again, you have an opportunity to grow your career. And for the vendor, it really depends how successful your product or your service. If you're building a product which is not successful and you don't making enough revenue and you expense, again, the company is going to cut your team. They're going to stop developing that product which is not successful. But if you are successful, the multiplier on the revenue may be 100 times bigger than on the service because the product is very successful. So you can have a great career advances, opportunity, and high salary and so on. So whenever you look at any cybersecurity job, besides looking at what you need to do, and of course you always have to look at that. Is it SecOps job? Is it R&D job? How do I going to impact that company I'm working on? Is it in-house job? Is it a service? Is it a vendor? You always have to also assess how my company makes money. Do I affect revenue? How do I affect revenue? How me and my team affect expenses? And what's the overall simple equation? Hopefully it's helpful. You can definitely have different opinion than I do, but hopefully it's helpful for some of you. And as always, just shoot me a feedback. I always would love to hear different stories. I personally went through R&D type of path of the career, so I might be a little bit biased towards R&D in the product. And I see the struggles, especially during the session, people have an in-house SecOps by smaller teams and constant burnout. So I hope that kind of answers some of the question, why is it happening? Or maybe it generates more questions and it will create an interesting discussion I'm super happy to be involved in. So as always, thank you very much. Subscribe to the channel and see you in the next episode of Cyber Llama Talk.